Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Chahine.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Chahine and Dennis Dick on the show today. We have, well, I guess we're friends with North Korea now, so that's good. We have that. We have couple earnings, mostly just Restoration Hardware that we wanted to discuss because that one is in rocket ship mode, and we're going to talk about a lot of stocks that Dennis thinks are primed for a short squeeze. So he's got about a half dozen or so, maybe more stocks that he wants to highlight that he thinks are primed for a short squeeze. So that'll dominate a good portion of today's show. We are going to be joined as well by Nick Chahine at 8:35. Joel, what is doing this morning in the S&Ps?
Nice range overnight. We went off the board at 86.75. That's the high close of this move. Yesterday's high has not been tested. 94.25, 92 even is your pre-market high. So there is your area of resistance. On the downside, your pre-market low, 82.25. I really like the $83 area. That was Monday's intraday low, and then it also was some of the highs from last week. So we hold there, good to go north. If not, we could slip into the middle 2270 handle. Moving over to Bitcoin up $42.50, really not bouncing off that thrashing from yesterday. Crude down 14 cents at 65.96. Gold in the red as well, 1301.90. That's down $1.30. And silver down 7 cents at 16.88. Dennis, how are you doing? You don't look a day over 42.
He's on mute there.
And yeah, I'm over 42 because you know why? I'm trying to unmute it. I'm trying to find the unmute button here. And I'm like, I can't find the mute button and the unmute button. So I might not look over a day over 42, but I feel like I'm over 42. And that was a Joel moment right there, trying to scramble to find the unmute button. But anyways, I'm doing well. I got a little bit, you know what? When you turn 42, I woke up with a headache. And the headache hasn't went away for the last 2 days. I think it was a little bit self-induced, though, because I took my boy day before my birthday to Santa's Village, which is this little like kiddie amusement park in Bracebridge, Ontario. And I went on the teacups with them. So like it's like a souped-up teacups, though. They call it like Blitzen's balloons. So you get in there, and I thought it was like a nice little balloon ride where they just lift you up and then they spins you around just a little bit there. Then I realized, no, each balloon is a teacup. So the boy loves teacups, and he starts spinning me violently around, and then the balloons are spinning around, and everything is spinning around. For 2 minutes, I'm just spinning in circles. And anyways, at the end of the 2-minute ride, I felt like throwing up, and also my head was pounding. That headache has continued now for 2 days, basically. Feel a little bit better this morning, so the headache is getting better here. But I tell you, as a 5-year-old, 6-year-old, 7-year-old, I'd loved all that spinning stuff. Can't handle it anymore, Joel. That is the age showing right there. Don't go on. If you're 42 years old, don't go on the teacups.
And I've actually been to Bracebridge, Ontario, believe it or not.
Really?
Yeah.
What are you doing at Bracebridge, Ontario?
I never told
Santa's
you.
Village?
I never told you about my summer camp story when I worked at a summer camp up in Halliburton. You know where that's at?
Oh yeah, the home of the black flies. Yes,
that was the first time I went to camp. I got some good stories from that, but that's not what the folks.
Did you get bit up by black flies?
No. We I don't remember that. That was like 100 years ago. So
do you have black flies in northern Michigan when you go up there?
I don't think so. I've never
Don't get black flies. They're not allowed to cross the border.
No.
They don't have their papers.
It's really tough to get across the border nowadays.
Yeah, Trump, he doesn't allow the black flies in. That's a good thing, because I'll tell you, I went to Halliburton, Ontario for a cottage like 10 years ago, and it was in the July 1st weekend there, July 1st to July 4th. I took that week off, and beautiful. I mean, this is beautiful. You're on the lake. It's really nice. You get there and you're like in this nice cottage. I'm like, wow, this is going to be a really good week. You're sitting out there enjoying yourself for about 5 minutes. Then you're like, oh, what's biting me? What's biting? Huh? The entire week, at the end of the week, I must have had 100 bites on me. Black flies just chew you up in Haliburton, Ontario. No so good. Anyways, if you get late enough into the season, the black flies will be okay. But early in the summer, black fly season, Haliburton, Ontario, it's bad.
All right. Thanks for the warning on that. Should we just talk about retailers just going absolutely bonkers again here? Maybe start with Restoration Hardware here, blowing it away.
The strong get stronger, Spencer. Tell us about it.
Yeah, RH. Let me fix my pro here because I have a filter on. There we go. RH reporting yesterday after the bell. Q1 EPS $1.33 versus $1.02 estimate. Nice beat on that. Sales $557 versus $563 million. So a slight miss on that, but the big number is they're raising their outlook. Their EPS guidance for the fiscal year was raised by $1. They also reaffirmed their sales guidance for the fiscal year. So a huge guidance raise and a huge Q1 EPS beat for Restoration Hardware.
The $5,000 antique couch place continues to outperform here, up 25 points here. I mean, you can't stop this stock. Jason Raznick he should be buying lunch for everybody here with the amount of money he's making on his Restoration Hardware and Tesla. This is a huge day for Jason Raznick. We should have him on the show. Restoration Hardware and Tesla. It's like his two main guns. Both of them. RH up 20%. Tesla trading up here 2.5%. $8 more for Tesla. Unbelievable movers, these two stocks. I don't know how you stop it. RH started as a short squeeze. You know when it started? You know what really kickstarted the RH rally a year and a half ago? Do you remember? I remember going back to like March, or it might have even been 2017. Go back to like March or April 2017. Do you remember what kickstarted it?
Goldman Sachs.
You are right, Joel. Look at you. The memory on Joel is just incredible. He remembers everything. I made a point to remember that. He could just pull that out of the hat. Anyways, Goldman Sachs upgraded to buy back. I think it was. I'm not sure if it's the exact date there, but I remember the stock being around $32, $33, and it blasted off the next day. It was up like 3 or 4 points on the Goldman Sachs upgrade. It never looked back. It's had some dips and some violent dips from there, going from like the 80 down to the 40 in the summer of 2017. But I mean, this stock has just continued to run and run and run and run. Now it's $143. You can't stop it, but you know what? I'm not coming in with my investing dollars because if you are buying it up here, this is the definition of chasing. I'm also not shorting it either because this stock is just on fire. So we'll go with the Nick Chahine, who is going to be on 835. He always says too high to chase, too hot, too short. Completely agree with that. And I am hands off on RH at this price.
Dennis, I have in Benzinger Pro that Restoration Hardware was added to Goldman's conviction buy list on August 19th, 2016.
Oh, it was in 2016 so this is a 2.5 year run. So you would be right. So let's go out and look where it was in 2016. That was right at the bottom. So yeah, it was like $28 then. Goldman bottomed this. You know what? Those guys at Goldman Sachs talk about them all you want. They know what they're doing sometimes, those analysts. They're very influential. And they're very influential for a reason because they're often right. Wow. So anyways, are they still a conviction buy or have they since then said, book the profits and get the hell out? Where is Goldman now? Do we know?
I don't see anything.
They're still conviction buy, man. When Goldman says sell, that's the top. We'll follow Goldman on this. Or if Jason Raznick says sell. Okay. One or the other. Those are the two guys.
Well, if you're thinking of
Goldman and Jason.
If you're thinking of selling today, maybe take a look at 146.80. That's your pre-market high. We've backed off $4 since then. I'm just the way these things have been running, you think it's going to be tested. 146.80 above that, just 150. Boy, Chris Fromhertz, who we had on the show last week, published, maybe put that in the pro. He gave us a nice setup on this bullish and putting on some spreads and things that were pretty conservative. And boy, oh boy, what a trade on that one. But currently trading at 24.53, up 24.53, 143.26. My number of the day is 146.80. Another retailer up, not quite as much. Lands End beats, and that was a nice looking chart going into it. How'd they do, Spencer?
What are you looking at?
Yeah.
Land's End.
Yeah, what's the symbol there?
LE.
Oh,
Come on.
What are you talking about?
Sorry.
Land's End is still a stock? I didn't even know that was still. Joel, you're pulling all the rabbits out of your hat. I didn't even know Land's End was still a stock. I have not traded that. When did that come back out? 2014.
Yeah.
Wow.
Yeah, wasn't it
I remember Land's End, but didn't it go bankrupt already once? And they reorged it? I thought it went bankrupt.
This is something with Sears too, wasn't it?
Yeah, it was supposed to Sears spinoff, wasn't it? I don't know. In any regard here, I did not realize that Land's End, or at least we haven't talked about it for a long time. It was LE. I didn't know it was still around. So anyways, here it is. Land's End.
The Q1 EPS for Land's End, ticker LE, 8-cent loss versus 17-cent loss. Estimate sales 299 versus $285 million estimate. So a beat on both of the Q1 numbers for LE.
Well, it's a retailer, so that's all that matters. The numbers don't even matter anymore. If you're a retailer, you go up apparently. So this is like retail bubble happening here now. I mean, we'll get to Fitbit here in a second here too, but holy cow, LE up 11%. Why does it do the other one too? There was another retailer too. If you're a retailer, you probably went up 10% or more. PLAY, Dave & Buster's, doesn't matter, you're a retailer, cool ticker symbol, stocks going straight up into the report, doesn't matter, reported earnings, and it's a retailer, so it has to go up. Did the numbers even matter? What were the numbers?
Do you want to give the numbers, or
give
since
the numbers.
They don't matter, we'll skip them?
Give the numbers. We want to know the numbers.
For who is this now? Sorry, I was in the chat. Play. Oh, right.
Follow along, Mr. Israel.
I was in the chat. I'm sorry.
I like to go on tangents.
I was in the chat. All right.
Spencer overslept by 90 minutes.
I did oversleep.
I'm the one with the headache.
I did oversleep.
God, what a
all right.
What a weak crew. I think I need to be Brent and Bill and Lizzie.
Okay.
I needed some new staff.
All right, play Q1 EPS $1.04 versus a 93-cent estimate. Sales 332 versus $323 million. So beats on both the Q1 numbers. They reaffirmed their sales outlook for the fiscal year.
That slight beat is worth 13%, isn't it, Joel?
Of course it is. Up 6.
Probably 20. Probably up 20 by the end of the day because that's just what these things do.
Wow, this closed at 40.67 on May 25th, and here we are into the 50 handle. Really got excited on this one. Someone ticked it up on a bracket that traded over 300,000 shares. It traded up to 57.40, Dennis, and now we're just kind of hanging out here. It looks like you got a little bit of a seller at 55. So I'd say 55 and 57.40 are your potential resistance areas.
Where's support? Because this thing's probably turning and going up. Where am I? If I'm coming in here and chasing it, where would you say you could buy it?
Do you want like a?
We're chasing now. We've moved on to full chase mode here.
Okay.
Stuff that goes up 10% goes up 20%.
This is like a half star number. Okay, so don't put your whole account on it. But if it got down to if it holds 54.40, I like it. That's
it's 53.80.
Well, so I don't like it then. I don't like it.
You got to get back up to over 54.40, and then you're a buyer.
Yes.
Do we have a chance to be up 20% again today? Because we've seen this a million times. It was already up 20% in the pre-market. Can it get back to those pre-market highs?
No, I'll bet a lunch.
I want to take that bet just because, but I don't know. Eventually, doesn't this bubble? There's a bubble in all these retail stocks here now. I mean, look at Kohl's. KSS is just in full rocket ship mode. Back in the summer, back in October, November, this is $40. It's doubled. This is Kohl's. This is it's back up near all-time highs. This stock went from like 6-year lows to all-time highs in 6 months. I mean, what's going on? Is the retailers this hot? Is Amazon dead? What's going on? Why are all the retailers now all of a sudden just everything? Like Amazon keeps going up too. It doesn't even matter, I guess. Amazon, everything just goes up.
I'll tell you, the all-time
this
high.
This Kohl's is nuts.
Yeah, wow.
Is it just not nuts now? I mean, how do you keep going though?
79. I mean, they do. I do shop there a little bit, and I do like it. Kohl's has.
I like Kohl's too. But everybody hated this thing. I mean, absolutely hated. The street hated this back in October. Now we're in June, and now they all have to buy it. I mean, I just don't get it. I mean, you know, and it goes to say, contrarian investing still works, guys. Remember we were saying, I don't like any retailers. I never did like any of the retailers, so I did not participate in any of this retail rally. But, I said, if you put the gun, if you were looking at me and you made me buy a retail stock, it was Kohl's the one that I wanted to buy. It had the dividend that was pretty decent, and it seemed like it wasn't a mall retail because they're in their own standalone stores. But I just mean when it's really rough out there, and you're looking for something to stick in your investment portfolio, sometimes you just close your eyes and buy some of these things when they're absolutely hated. They turn around and they're loved. I mean, Macy's at $16, now it's $39. I mean, you can look even to other sectors, and some of the food stocks even bouncing back. But this market's in full bull mode here and now. We look at the strong get stronger. We've been saying the weak get weaker, but some of the weak are even getting stronger here now too, Joel. We are seeing some stocks come back.
Okay. Wow. It's really hard to follow you today, man. You are
that's the headache.
Okay. What was I trying to do numbers on? You know what? How about a stock? Kohl's the all-time high. Jazz picked up a stock here, and you throw it into the retail food. Casey's General Stores, Dennis. Look at this chart here. Just kind of, it falls into the retail sector, right? I mean, so. Here you are, just skimming along the lows of the move. It doesn't report until June 20th here. So double top at 98.
I think they report today.
Let's see here.
CASY I have on my schedule for today.
CASY?
CASY.
Huh. The pro calendar says June 20th. We'll have to double check on that. But
so we don't know if they report here or not. We don't verify, but I don't think they've reported yet here. There's nothing.
He says 8:40 a.m. Jazz says so.
I think it does report today.
Yeah, keep an eye on that one.
We already have two retailers up 20%, so I don't know if it's going to be the third one going up 20. But eventually, is there not a bubble here in all these retail stocks now?
Could have said that a week ago.
That's just it. You could have said it a week ago. It continues to inflate there. But why are the retail stocks, Spencer, you're quiet in the background. Why are all these traditional retail stores that were hated 6 months ago now the most loved things on the street? Is it all just short squeeze?
Sentiment, man.
All started with short squeeze?
Sentiment. Sure. Start with a short squeeze. Sure. Sentiment. You know that better than anyone. It just turns and we go round and round in circles all the time.
Does the market even look at fundamentals anymore? Do they even does anybody just sit there and crunch numbers and actually, buy on fundamentals anymore? Or is it all just momentum and technicals? It's a serious question.
I
think that's a little bit of an exaggeration. People obviously.
What does Amazon have? Over the overall, 10% of the retail.
It's a lot.
Yeah, it just 10% of all. So the other 90% has to go somewhere, and I guess we're just finding out some of the winners and losers. I guess.
Well, Walmart, if you want to find a loser, it hasn't participated at all. You see the Walmart chart?
No, they did that big purchase. I think people are a little bit skittish on that. They did the big purchase of that Indian company from India, and it was a big purchase. So they're doing it. They're sacrificing a little bit in the short term for the long term. But yeah, Walmart. It had that ridiculous. What did it get to? It got up to 109.98. Got well over 100. So. It's pulling back, but yeah, you're right. Walmart has been one that hasn't participated. And then don't look for dead at JCPenney, but that stock has had a rally too.
This is short squeeze central here on a lot of these. And I actually did a list here, and I think we previewed it off the hop. I went through a ton of charts last night looking for stocks that could potentially squeeze. So looking for high short interest relative to the float, and then looking for stocks that haven't really run yet. One that has already run and one that's going to get beat up today here. But this is a classic example of the type of market we're in. Look at SeaWorld, SEAS. This is a dog. This is a long-term dog. This stock is under $10 in 2 years. I'm calling it now. But right now it is in short squeeze central. $21 it gets to yesterday. It's going to have a rough day today because Citigroup said we're having none of it. They came out with a sell rating, downgrade to sell today, and put a $15 price target on it. I'm with that. This is a pure short squeeze. But again, you got to think, okay, well, if it pulls back a little bit, you got people who are getting squeezed in here and they're looking to grab offers because they're in trouble. So it pulls back here today. It's going to probably open under 20. It's offered at 20 right now. But this is a classic example of the type of market we're in. High short interest stocks are just flying. And that's the squeeze that they're given to the shorts.
What's the short interest on SeaWorld?
go find out. But it hit my filter. I ran a 25% filter last night just to scan, just to see, and SeaWorld was in it.
I've got 40.
So,
I've got 42%.
Yeah, it's 40. So this is your classic example of people thinking, well, this is going to zero. Well, it might, but it's going to maybe just squeeze the hell out of you before it does it. So, and I don't know if it's going to zero, but I think, I just not a big believer here in Shamu. Sorry, SeaWorld. But 2101, now it's $20 with the Citigroup downgrade. I think longer term, I think it's, in trouble, but short term, things are hot because you know why? That's too many people short. That's a huge short interest.
Yeah. Let's see. It's not on very, very, very light volume here. Old down ticks here, 200, 100, 6,800, 200, 500 shares. Important level here, though, is 1888. That's basis the daily charts. That is your 4-day low. Below that, double bottom at 18. So let's see what happens at the 4-day low as well at the double bottom at $18. But SeaWorld ending its 1, 2, 3, 4, 5, 6, 7, 8, 9-day winning streak.
So, okay. So this is pure short squeeze when you see those 9 days winning streaks. That's bound to end today here with the downgrade. But let's go to my research here from last night when I was filtering through. And you can use a lot of, I have different filters and scanners to look for. But if you're looking for some free stuff there, Benzinga Pro has scanners that you can search for this type of stuff. I know Spencer Israel is very quick with the Pro there, so you can find all this type of stuff. But let's go look here at 6 stocks that I wrote on my potential short squeeze list.
Okay.
One I wrote there mainly for the reason because of Andrew left here, and it's not Fitbit because Fitbit is already rallying. But FIT, we know Andrew left from Citron. The bubble buster is now turned into a bubble creator here. He gets bullish Fitbit, puts a $15 price target on it yesterday. Stock blasts off into orbit, going up from 625 up to 759. Closes 728. It's up a little bit here. But you know which one I like here now for a short squeeze is GoPro. Because GPRO, nice chart yesterday. I'm long GoPro, full disclosure. This is, just a nice looking chart here, breaking out. I think, long term, I'm still not a fan, not going in the long term investment portfolio, trading it specifically for a short squeeze. If you go, Spencer, what's the, do you have it just in front of you there? GoPro short interest. It hit my scanner, so it must be over 25%.
I've got 24.5.
Right, it's right there. Yeah. So anyways, maybe my scanner was slightly off, but 24.5%. So huge short interest here as well. Fitbit, for whatever reason, these two stocks like to trade together. And as Fitbit gets stronger, GoPro gets stronger. I don't think it's a coincidence that GoPro was fairly strong yesterday too. So I think if you get, any type of pullback towards a 6, 610, 620 area, I think you're going to find buyers here now. I think this thing could go to $8. So long term, I think it's going to go lower. Short term, though, I think we got a rally on our hands. I think it could squeeze. So that's why I'm looking at GoPro here, trading at 644 in the pre-market. And I think there's room to $8 on this thing to squeeze them.
Real quickly, on Fitbit, you did have that pop yesterday. Yesterday's high has not been taken out. Take an eye on that. Keep an eye on 759. That was the high from yesterday. Backed off to close at 728. So clearing 759. Maybe keep an eye on $8. But listen to this, Dennis. And Spinner pointed this out yesterday. The stock usually trades around 4 or 5 million a day. On June 5th, 11.5 million. June 6th, 16 million. June 7th.
This is Fitbit?
Yeah, 11.5 million. Said 5 days, a huge volume. Okay. And then yesterday it blew it away with 57 million. So huge accumulation going ahead.
Well, it's probably Andrew left.
I don't know if he takes that big a position here. But,
I bet he takes big positions. I bet all his friends do too.
Yeah, exactly. So I'll keep eye on 759. We have not been in the $8 handle since January of 2017. That's when you made a high at 840. So we'll keep an eye on that. Fitbit, GoPro. This is so hard to read because the chart is just so, because it's just been stuck in the gutter for so long. But here I went farther.
You don't think this could pull it out though?
No, I do. I just had to go back. The trading activity 661. That's a potential target. That was your high on January 17th, and then the high for the year is 718. and then you got a gap to fill. So, I mean, it looks good. It looks like cleared that $6 hurdle yesterday. I'm not going to argue with this one on GoPro. Not sure when they report next. S&Ps just go green here on the session, just by a few ticks, Dennis. We are trading up 2 ticks here at 87 1/4.
Another stock on the short list here that could potentially squeeze them. Again, I'm just looking at high short interest here, but a nice candle yesterday. Finally, GoGo, GOGO. Check this one out. So $5. It closed near the highs of 522 yesterday, and it looks like it's got some room here too. I mean, it got slaughtered there, down from $9 to $5. But the short interest on this one, Spencer, I'll let you keep doing these in the background if you want to grab it.
15.
Again, it hit my filter, so it's going to be fairly high. What's short interest on this one?
15.5%.
15.5?
That's what.
Okay, I had 39.
Wow.
So
okay, well,
in any regard, maybe there's an issue with the float, but and I don't know if it's 15.5, 30. Regardless.
Oh, I'm sorry. I was reading the wrong number. I'm sorry. I was reading days to cover. I do apologize. Yeah, you're right.
39%. So when you get these things up over 40, they can run. And here's a stock that has been in the gutter. Here's a stock that probably in the long run is going lower. But right now, there's people looking for stuff potentially to squeeze, and this is a candidate. So GOGO, I don't have any position on this one, but I'm looking at it. And if I can see some nice movement here this morning, I might actually take a position. GOGO, this is the internet, right? In the planes?
Yep, the plane internet.
Airline internet?
Yeah.
Yeah. So
540.
it's potential to squeeze them.
540. That was your high on May 29th. And then, I know there's a lot of highs in this one, but you know what? Make it even. Make it 550, and you got a pretty clear breakout on this one. Nice volume yesterday, Dennis, on the 21-cent gain yesterday. 700K traded on Friday, 2.2 million on Monday. So perhaps revving up here for a rally as well. It's trading unchanged here, 550, 522. So looking for a swing trade, boy, you got a lot of support at $5 and just under $5 in GoGo.
BGFB, which is Big Five Sporting Goods Corp, another one that could potentially squeeze them. I've got a 39% short interest on this one there as well. So 8 million of the 21 million shares are sold short. Stock has been on the comeback trail a little bit there, but hasn't really went into this parabolic move that we've seen a lot of the other ones. This thing gets up over $9. It could squeeze them. So keep an eye on this one too.
$9, and that's a monthly number there for April, May, and we're halfway into June almost. 9.10, 9 even, 8.90, $9 bona fide breakout in Big Five Sporting Goods. Your August of 2017 high was way up at 11.10, and the other thing about these stocks too, Dennis, I mean, as far as like the big boys playing them for shorter trades, I mean, they're low price stocks and not a lot of margin. So like a big fund or something can, come in and buy a lot of shares of these and, reap the rewards if they do break out. HIBB, that was the father's stock. That's Reverend Emmanuel Lemelson. That stock's pulled back after earnings, but just trying to put a bottom in here. And then what about Dick's? Did that keep going after it's, look at this one, Dennis. Something happened. What happened? Someone hit it down.
Well, that was earnings. No, that was earnings. Remember, Dick's.
What about today?
It's not doing anything today. Hasn't even traded. Zero volume.
Yep, I got an odd lot here. Well, keep an eye on Dick's though. If you're trading this thing, you have 3 days where you've stayed within a buck range from 37.05, less than a buck, to 37.81. So I'm gonna keep an eye on this one. Break above 38, we're going to go back up, test the high of the move. But if we break below 37 here with Augusta, we could be giving back some of those profits from the last report.
Smaller short interest on this one, but I like the chart. And so I'm kind of going now away from the short squeeze candidates, but it's still got 11% short interest. OCUL, Ocular Therapeutics. Look at this chart. Doesn't kind of just like it's itching to go here. I mean, you look at it, 7.25, just bumped its head up against a couple times. If it could get over 750, we could be in blast out mode there again. So, or blast off mode. OCUL, you like that chart? I kind of like
OCUL. I did OCUL.
OCUL, yeah.
Yeah, I did OCLR. Yeah, right there. 4 tops in the same area. Also right here at 740. You also peaked right in this area, 739 on March 16th, and getting a running start here with the close at 7.25.
And then just looking at stocks that could potentially break out. So we moved away from the short squeeze candidates just in the potential breakout candidates. Another one that looks like it's ready to go is Spotify, SPOT. This stock is just banging its head up against a couple days, 173. It gets up over 173, which is trading above in the pre-market. I think it's in blast off mode here, and this could be 180. I mean, this is a stock that obviously this is the all-time high here now. It's only been out for a couple of months, but this is the kind of stock that could get a lot of love in a hurry.
And Sean liked this one. Remember we had him on like a month or two ago? We were kind of making fun of him, and he did like this one, and turned out he's looking okay. 172.93. That's your all-time high. That was made 2 days ago. All-time closing high, 172.37. Trading up though here on very, very light volume, but really nowhere to hide if you short this thing, as it looks to be breaking out here. CPI, boring, comes in line. SPOOs rallying back up now, up $1.50 here at 88.25. Yesterday's high, 94.25. We'll keep an eye on that. Pre-market high so far. Stands at 92 even. Dennis, Twitter trying to break into the $43 handle.
Wow, gone.
Do you want
strong get stronger?
Yeah, we got what price target raise?
Yep, JP Morgan, $39 to $50 is the new price target. But I think they still have, excuse me, I think they still have the same rating on the stock. It's just a price target increase of $11.
They put it on their best ideas list too, didn't they, Spencer? Whatever list they have, I saw that go by.
Possibly.
Yeah. In any regard, they're bullish, and that makes the street bullish. And this stock is just in full. What was it? I never looked at the short interest on Twitter. Where's that thing kicking around? Like, did that start as a squeeze back in the day? And I don't know if anybody's short it now. I think that they've overstayed their welcome. It's only 5, so it's not really an issue. Every stock around 3 to 5, so that's not really an issue at all. But anyways, wow, this is just in rocket ship mode too. And I mean, the strong continue to get stronger.
You think this will go back and make an all-time high?
Well, that's like it's 70, isn't it?
74, 73.
It's hard to bet against it now. It's loved. I mean, that's all that matters. The fundamentals, they'll justify whatever fundamentals. Oh, they're figuring out how to demonetize it. Every single media person that gets on there wants to justify a move with fundamentals. And sometimes there's a fundamental reason, and sometimes it's just pure sentiment, like Spencer was saying off the hot top of the show. I mean, stocks get loved. They just continue to go up. And fundamentals don't even matter sometimes, because you can look at any report. And if you want to try to find something good in the report, you can. And if you want to try to find something bad in the report, you can. Sometimes stocks just go because everybody wants to own them. And that is what Twitter is now. Everybody's talking about it bullishly. Every other day you get an analyst giving positive commentary on it. It's loved by the Main Street, and it's loved by Wall Street now too, because the analysts are coming in and raising targets as well. And they chase price too. So you get that ball going in that direction, it's hard to fade it. And every pullback that Twitter has now has been a buying opportunity.
Yeah, never see it in the teens again here. PCG. Should we save that for Nick? That had an interesting candle yesterday. Pacific Gas and Electric. Should we bring in Nick a little bit early and have him talk about that one? Since
is this one Nick? This is a Nick Chahine stock, PCG?
No, he's out in California.
Oh, so I want to just see how those fires were doing up there.
Yes. Nick
Let's
Chahine,
bring Nick.
Yep, he is the author of Create Income with Option Spreads. Nick, how you doing?
Good. How are you?
Good. We're bringing you in on a California stock, PCG. We got a comment here that found support after the news. They caused some of the California fires here. Didn't take out the low of the move here. Let me guess. This is too much news on this one for you to really get involved.
Yes, because I was their client for a while. I lived there. So technically it's not pretty. And I don't know enough about the fundamentals, but they are, if you take a monthly look on it, then that's the only way you can actually see what's below current prices. They're testing a neckline that if it fails, then you don't know what's below it. So I don't know enough fundamentally, but from a technical perspective, you can assume that it found support. But what if it didn't? And what if there's another headline? Then I can't tell you. It can't go to 28, 29. So unless I know the internals of the situation there, I wouldn't risk it.
I mean, there's, we don't know what the liability is. And if you want the backstory to this, they have been found liable for some of those fires caused out there. They slashed their dividend last year, I believe towards the end of last year, to nothing. They slashed all the preferred dividends to nothing, just temporarily, because they didn't know how much they were going to be liable for. So until we know those numbers,
right?
Until we know, like, they could come out and just slap them with some type of fine that the company can't even absorb. I mean, that's the scary thing when investing in something like this.
So to put it in perspective, this still sells about 12, 13 PE and trailing. And when Micron was at 5 or 6 PE, it got cut from 48 to 35 in somebody's ratings. So it is cheap, maybe, but it definitely could get cheaper. It depends on what happens with the headline. So I don't know enough about that.
Too much.
This floor that they've been testing, and it's not a hard line in the sand. It's more of a wishy-washy area. It could break, and they could go lower.
Nick, go ahead, Dennis.
I was going to say, we were talking short squeeze. I don't know if you were listening to the show here before you came on there, Nick, but we've been given like short squeeze candidates for a while. But I just want to talk this overall market here with you, Nick, and you follow a lot of different stocks. And we've seen, stocks like the Tesla and the Twitter here, taking off, and the strong getting stronger, the weak getting weaker. But what I've noticed here in the last maybe in the last week, is that the weak are actually starting to get stronger too. So it's not even a matter of the strong getting stronger. The weak are getting stronger too. I mean, stocks like IBM have turned around and started to come back. Some of your food stocks had great days yesterday. Our Kraft Heinz, Joe, we're back to even on that one. Mondelez, MDL, Zebra broke out through 40.
Yeah.
I mean, some of these stocks, is it just like they're buying everything now?
I went long KHC yesterday before the spike, and
nice.
To your point is I had a dozen other ones I could have done. So there were so many cup handle-ish looking stocks that I was like, okay, oh my gosh, what do I buy? So I have to pick and choose. I can't go along everything. So I was long. By the way, weeks ago, I said 2755 is the likely target on the ES, the minis. And then if that opens the door for 92. I didn't know it was going to come this fast. But there's an even bigger target way above here if this unfolds the way I think it will. So, but even with a dip from here, actually the dip will make it more likely in order to make a handle of sorts. But if it doesn't, then it's a straight shot up there. So we were scared of a whole bunch of things, and then those scary parts are no longer that scary. And without any new headlines that are scaring us, then I said the bear thesis is thin, and that's why you see strength everywhere.
Like, what about Fitbit, off Andrew left yesterday, and you're starting to see some of these dogs JC Penney, Sears Holdings. I mean, they have higher short interest, so maybe it's just a matter of just squeezing those guys. But JC Penney's up for 6 straight days. Is JC Penney turning it around?
No, I would not take JC Penney trades. I would not take Fitbit trades. They're so much better than that. Fitbit, JC Penney chart looks good, but I don't know if the story looks good. Why risk it with all the stocks that are out there? So yes, it could have tremendous upside. Yes, it's only $2 or $3, but that doesn't mean it can't go lower. So keep in mind that if the stock market actually corrects for whatever reason, I have to pick stocks that will hold on their own merit, rather than a technical upside or getting caught in the whoosh higher. So example,
you want a good fundamental story too.
Yes, J&J, for example, went long it and got off it yesterday for a nice profit. So catch the ones that look like they have breakouts, and they also have intrinsic value on their own and a good story on their own. Either got beat up too long or something like that. So Teva was a nice ride. Tesla was a nice ride off the lows. Once I saw the Elon interview last, and he sounded like a guy who actually found some relief. He said, this was tough the last few months, meaning nobody would say that if there's still tough situation ahead of them. So I said, you know what, this is a long. I got off too soon, but I knew that 340 was the target, and I think this morning was above 340. So if I'm long Tesla, I'm getting off here or trimming or booking profits somehow. Definitely pick stories that have their own merit.
Nick, we're talking, Spinner just mentioning dogs maybe being bid up on upcoming rebalancing at the end of the week here, quarterly rebalancing of portfolios. So that's something to keep in mind.
We got the Russell rebalance on the fourth
Right.
Friday in June coming up too. That's not for another week and a half here, but that's the big one. I mean, the Russell, you get a lot of smaller stocks that really move on that. So that's something to consider too. So you are going, that fourth Friday in June is the absolute like menace there for sure, for anything that's, smaller issues, because they really move on that.
Everybody is all confused as to how this rally happened. But if you believe in the technicals, the headline will match the technicals. And there were cup and handle in the Qs and the IWM and the SPY that nobody was talking about while the stock market was falling. That's why we stuck to our guns. And I said, if we don't have any new headlines, the bottom is in and there is much more upside, and it paid. So from here, it's just the matter of managing headlines. People keep saying typical things and just ignore the noise. I said, here's a way of thinking about it. If there were no news for 2-3 months and the only thing you had to go on to invest in the stock market were P&Ls, do you sell or buy?
Good quarter.
What?
There was good quarters by a lot of companies,
yes.
Whether or not
yes.
it was the tax breaks coming through or not. But any thoughts on this AT&T Time Warner merger? I think we're supposed to have an opinion decision today or forthcoming here. Kind of hard to play, Nick. Are you doing anything with AT&T or Time Warner?
I could go long AT&T, but here's the thing. I think they want ideally a clear yes and not a yes, but. So if the judge says yes, that you're clear to do it, but there's some conditions on top of it, sell this or do that, there might be some disappointment. But overall, AT&T had a nice bounce, 5-6% off of in June or since late May. So that was a nice bounce, and it's up to a long-term pivot point area. So 34.50 is some sort of a pivot. So usually those are resistive a little bit, but if the price volume, if the volume profile is to live up to its potential, 36.50 is doable over time. So the way I would play it is probably sell puts or put spreads in it to generate income, and or buy some debit call spreads out in time and wait for it to move.
All right, Nick.
Let's talk.
Go ahead, Dennis.
I was going to talk the banks here just for a second, because we have done a lot of bullish talk here. And one sector that still is not participating that well, considering how strong the market is the banks. And I'm still going to say, I think this storyline here is Deutsche Bank. DB has not really rallied here. It's kind of meandering. We've been straight up here for a week, on a lot of the indexes, and Deutsche Bank is still at the same price. Yeah. And that's kind of telling me that it still wants to go lower. Maybe there's some currency effects in there too here, but this stock chart is ugly. And imagine Deutsche Bank, I'm just playing out scenario analysis. Imagine Deutsche Bank has another bad headline, falls to single digits. What do you think that means for the U.S. banks? Because they are counterparts to a lot of money at Deutsche Bank. I mean, I think that is what is weighing on the U.S. banks. What are your thoughts here, Deutsche Bank and the U.S. banking situation?
For me, it's easy.
Okay. I like easy.
Yes. Number one, I admit I don't know the tie-in between Deutsche Bank and our banks. Like, I don't know exactly the commingling of funds. I hear that the Deutsche Bank problems are Deutsche Bank specific. So if that's the case, there shouldn't be any spillage over here. But I can tell you how I trade the ones here. I go long them long term. I sold puts in Bank of America at 26, and they paid me easy money. On the day every bank here fell 4%. You remember recently? So, for example, Citigroup fell 4% one day. And I was like, what are you doing?
Week and a half ago.
Right? I sold puts at $1.35. They're now 70 cents to close. So I got almost 50% of, easy money. I say it that way because no money left my pocket. I know one thing. There is value in Citibank. It sells at a just over book. It sells in the low teens PE. If it falls hard with no reason that I can see, I can go along it with confidence. That's how I'm trading banks.
But question, I wanted to just interrupt you on that. That strategy in 2007 would have annihilated you. That's the one thing, because you saw Citibank go from $45 down to $1.
So,
so book value didn't matter when we went into a full financial crisis. I'm not saying we're doing that.
No.
But I'm saying there is scenarios that, you've got to be cautious sometimes with, banks, because they're so levered. So they're still levered.
No doubt. But here's the thing. They're not as levered, nowhere near as levered as before. And I have to trust the Federal Reserve that they put stringent tests on them. I mean, tough tests.
Somewhat, but now Trump's backing off on a lot of that stuff.
No, not the balance sheet. They're not selling off assets and leveraging themselves. They're backing off of whatever red tape they had to get things done, extend loans. And that's a process that takes years to build. So I take your point. But if you're going to buy the banks, if you wanted to bet on something, betting on something that's at book value is a lot safer than betting on Tesla or whatever. So
it's a fundamental story here.
So if you're going to keep the 2007 shoe over our heads, then you can't invest in anything, because that is the underlying. The black swan can happen at any point in time in 1900 or 2150. So. You can't not invest because of a black swan. You could.
What do you do? And because you're very good at managing risk, what do you do in a scenario like where I'm take it back? Were you trading during the financial crisis? I'm just curious.
I was.
How those strategies worked back then, because it's one thing, and obviously, Nick, you're a great trader. You've been making money for a lot of years doing this. I'm just wondering, everybody's so bull train, and I'm staying on the bull train. I'm fully invested. So I'm not saying this is happening. I'm just saying if I'm looking for something out there that could potentially happen, I think the issues would come from Deutsche Bank. It's the only possible issue that I can see out there right now. But what do you do? How do you protect yourself in a scenario where all of a sudden, maybe you've got some puts written on something you don't want to have puts written on?
Then I don't do it, because risk is.
Well, no, you've already done it. You said
but that's part of taking the risk. Two things. Number one is, what's my consequence? If I'm looking to make a jump on a motorcycle, am I going to die? Then I don't do it. But if I'm going to get hurt at worst, then I do it, accepting the hurt. So if I lose my money, so be it. I made the decision, and I know I'm going to lose X. Now the second part of risk management is, what's my likelihood of losing? So that's the part I manage. So if my likelihood of losing gets over the line that I accept, I get out. I book a loss, I book a profit, whatever it is, I get out. So that's how I manage risk. The number one part of how much I could lose, it's done. I do it from the beginning. I take the risk. I did it. I don't think about it again. I put it at risk.
Because you're always buying the lower put to protect yourself, correct?
Maybe, maybe not. But if I buy a stock, forget options. If I buy a stock, I decide to buy it knowing I could lose 100% of my money. Otherwise, I don't accept the risk. But then what's my likelihood of making money? That's the other part I manage. So it's not going to go to zero. The Deutsche Bank problem, to your point specifically, is everybody knows about it. The black swan event, nobody knew about it. So it just hit us. So if everybody,
I don't know if that's totally true. And, I obviously agree with you a lot of times here, Nick, but, I just look at, I think a lot of people know about the Deutsche Bank stuff going on here. I think they're just ignoring it. I think the market is just very good at ignoring problems when everything is going straight up. And I mean, you can look at 2007. This bull train looked like in the beginning of 2007 that we were going to go up forever. I mean, the charts look good. Markets read all. But
there weren't. Were there people like you talking about a Deutsche problem?
Peter Schiff.
He always does that.
Yeah, no, I know.
He's right every 20 years. He always does that. Every 20 years, he's going to look like a genius.
One reason, though, that I'm always been underinvested in banks is because I got burned during that financial crisis.
Yeah.
And I didn't get burned as hard on some of the other stocks, but I had Citibank, and I had Bank of America. I had a few of these banks, and I said to myself, I'll never get heavily invested into banks again, just because of that potential that something silly.
So you keep the balance. If you don't get heavily invested, you keep the balance.
Yeah.
I always say that in my portfolio. I'm trying to get balance. So here's the XLF for a monthly chart. That includes your 2007. Yeah. So it's not a disaster. It was a disaster for a while, but if you stuck
if you're on margin, it's a disaster.
Yeah.
If you're pure cash, you're fine. If you're on margin, you're done.
Yeah, I don't do margin, and that's the good thing about options. They use the word margin, but it means something completely different.
Right, Nick.
So, When you're
Because
writing a put, you're always got enough cash to cover it in case you do
no,
something
no,
goes
you don't
zero?
always have cash to cover, but the margin doesn't mean you're borrowing money. It just means that they assume you can cover your bet. So luckily, these bank stocks are all cheap. So yeah, you should be able to cover them. I don't write puts that I can't cover. So I don't extend to myself to where I don't put myself in a situation where I'm going to get a margin call because the price dropped. So if I sell a put in Bank of America at a level and Bank of America goes to zero, I can buy it at that level. Otherwise, I don't write the put.
All right, Nick, just want to ask you out of the chat. Down War Dog is looking at CB. That's Chubb, the Chubb Corp. I'm looking at it, and it's just insurance company here trying to put a bottom in. To me, I'm seeing a lot of significance at the 134 level. Since May 24th, we've had 4 highs between 33.73 and 34 even, or 34.07. So for me, until it clears 134, path least resistance is the downside. You got any thoughts on CB, Chubb Corp?
CB has lower highs, banging on an area that becomes important. What happens here, obviously. So if there's no news and the floorboard holds, then it could use it as a bounce. And if it breaks the downward trend line, then it has some upside. So it depends on what happens in the neckline. And the neckline is an area more so than an actual hard line in this. And I just shared a weekly chart to kind of like illustrate, but that also can be seen on a daily chart where it's 132, the fight between 130, holding, and the breakout from the descending lower highs. So let's put it this way: if it gets to 134. It can bounce just like Teva situation had, where a stock that gets beat down. I don't know their fundamentals that well, but you probably do. But technically, it could have some upside. Depends on what happens here.
And you were talking about Twitter a while ago, shorting that. Did you ever get involved? And that
I did.
one, and you had to cover it, or you giving yourself some more time?
No, I gave myself some more time. What I did is I bought a few calls to stop the bleeding, so to speak. So it's technically, I knew it had upside potential, but I'm daring them to deliver on their promises. And besides, I bought puts, so it's a finite amount that I would lose, and I accepted losing it. It's just me fighting with the fundamentals. I haven't seen. I mean, I'm a client of Twitter, and I get the same emails I got before, and I just don't know where the extra money is going to come from on their P&L. And now it's a show me type of a deal. And if they say they cleaned up the platform, then their usage metrics are going to go down or not up as much as they expect it to be. Because if they're cleaning up the junk, the fake accounts, then their metrics are going to go down. And
one other one for you here, LRCX, Lamb Research. We never got the news, or maybe we did, on why this had the big decline here.
Somebody wrote something about it, and I went long it. So I'm long LRCX. I knew I wasn't going to catch a bottom, but this is a good company. And so technically it has some downside risk to it, and I will probably stay in it. And on the fact that it's a good company that usually delivers results. So the idea, technically, there is risk anywhere below 180 or 181. It could trigger some technical selling. It kind of looks like a head and shoulders, but not quite with the neckline. But it could fall to 170. So I have to make room for that, and I do have room for that.
We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Joins the show every Tuesday to share his technical and fundamental outlooks on the market. Nick, thanks for joining us, and we'll talk to you again next Tuesday.
Can't wait. Pleasure.
All right. S&P's coming back to life here. Up 275 now at 89.50. Your pre-market high stands at 92 even, 94 and a quarter is Monday's high. Double close up at the 96 and a quarter level, and then say hello to 2,800. So market having a nice quiet rally here during our pre-market show. 8:55. Dennis, did we talk any imbalances yet today?
No, we talked those in a second. I just want to clarify, I'm not getting on the whole bear train here, and I think some people, think I just had a little bit of a bear rant there, but you've always got to play a little bit of devil's advocate, even with yourself sometimes. And when you're getting all bullish, and I'm putting on positions like GoPro, these are dogs. And when you're putting on dog positions, you've got to be prepared mentally to quickly get out of stuff if the worm turns. The one thing that I continue to watch is Deutsche Bank as an indicator, because I think when this market goes to go for its next downturn, I think it's going to be the reason. And that's just my opinion, and the markets, we all have opinions. So fully, just out there, I'm full on invest. I'm full on bullish this market here right now, but I'm cautiously bullish. And the one reason I'm cautious is because DB is not participating. I know we'd say, oh, well, yeah, it's up, 3-4%, or, Italy's come back here now in the last couple of days, and Banco Santander's come back too. Sure, these things have had nice little relay rallies, and that makes you a little bit more, that you can get a little bit more aggressive maybe with some of your longs. But just be cautious, because some things can happen very quickly over there. And, it's not like it's like overnight, it's one of these stocks could gap down 10% and everybody's all of a sudden selling, banks, and then they start turning around and selling everything. So all I'm saying is I'm cautious a little bit right now, just because, one, everybody is bullish on everything. And when everybody is this bullish, I've seen this party story go out before, it can sometimes, catch everybody by surprise. And I don't want to be caught by surprise. I did go through 2007. I did, be fully invested. I did get burned some. I've learned from those mistakes. And now I'm somewhat, cautious when everybody is all bullish. And I'm always looking for the potential red flag that's out there. And that right now for me is Deutsche Bank. As long as DB is holding above 11, we're good to go. Keep trading, keep investing. We're probably still going to be, doing okay here in the markets. But if DB starts to give her back and start to look ugly again, be careful with not only your bank stocks, all of your stocks.
I'm going to dig someone up tomorrow. I'm going to get on the horn here after the show. And I got someone that's pretty good on Deutsche Bank I think you respect. So maybe I can try and get them on tomorrow's show as well to discuss that situation. That's the only thing. I mean, I know you're talking about the banking. I know you're concentrating on the Deutsche Bank. I just to me, the next crisis or next thing that's going to turn the market, it could be an unknown. I mean, you had the dot-com bubble. You had the housing, banking. So, I'm concerned about that. Regulations have changed. Trump's trying to reverse that, but it's the blind side. It's obviously there's nothing on the horizon right now, but different reasons caused different catastrophes. I mean, you got things, big week going on with the Brexit discussions this week. You have Deutsche Bank updating, or not Deutsche Bank, the ECB updating their bond plan. You have interest rate hike tomorrow. You have the Bank of Japan still stimulating their economy. So there's a lot of fundamental things going on right now. And right now they're all being construed as bullish. So we'll just have to see how they play out. We have a minute and a half.
Can we talk about CRISPR real quick?
CRISPR, everyone's been going crazy.
Yeah, I know.
Let's talk about CRSP.
We didn't get there yet today. We got 2 minutes left in the show. So CRISPR Therapeutics, CRSP. One of the last things you want is for your drugs to have side effects that cause cancer, which is what was reported yesterday. So that's why it got the beats yesterday. There's some people in the chat here saying that, I think in the YouTube chat, saying it's only in a specific set of easily avoidable circumstances. I didn't look super closely into it, but the headline was obviously not good. Someone who knows more about this, maybe I can try to get Adam Thurston on the show tomorrow. But obviously more research will need to be done to get the full story here. But the headline is obviously not good.
Dennis,
yeah, down $13 yesterday. It's rallied back a little bit here, maybe a little relief pop, but this stuff, and this is the one thing about biotechs, you've always got to be careful, and there's always headline risk. It's one reason why I believe Nick, he's cautious in some of the biotechs when he's writing puts on there, and I'm always cautious even in my overnight trading on biotechs, just because there's always a random risk of some headline they're not going to stock down 25%. I mean, that happens. So, but there's good return in biotechs too. So you still got to be able to trade them. You just got to be able to stomach, the risk when, it happens, because if you're trading any biotech stock overnight, there's going to be situations where you're going to have a stock. It's going to have bad news, random headline come out and get you. Well, so you just got to.
Yesterday was midday. This happened midday, which is one of the reasons why it was so interesting, because it happened at like 11 o'clock.
Yeah, so even intraday, you can sometimes get hit with these
tough.
things. So.
This one, okay, you get a little rebound. You're up $1.88 at 61.45. And it's just kind of holding here in the pre-market session. Would I be looking for this if like the street's just going to overlook this and say, no big deal? Then this is going to go back up to 65.5, and it's going to take that out, and it's going to continue to go back up to the $70 area. The reason I like that is it represents a 50% retracement of the all-time high. There was made only a few sessions ago at 73.8. All-time high is 73.90. You had to break down to 57. That's a 17-point move. You take half of that takes you right back to the $65 area. So that's what, if I'm an owner of CRSP, that's what I want to see happen, and happen soon. If it gets anywhere near $70 over the next few days, just be aware that was a double top from Friday and Monday. Dennis, any final thoughts here? Down, we are run over by a minute here.
Still, this bull train is in full charge, and full disclosure, I'm staying, from a trading perspective, I'm more apt to buy stocks and sell stocks short here because it's just continuing. Again, being cautious with some of those buys. Twitter, 131,000 shares to buy from an imbalance standpoint. That's because of JP Morgan. GE, your dogs are barking here. GE is starting to show life as well. 108,000 to buy here this morning. AT&T, which is going to be all over the news here today once we get this Time Warner decision. It's got 182,000 to buy, so somebody's buying AT&T ahead of that potential decision. Verizon following suit with 70,000 to buy. We got Merck, 35,000 to buy. Pfizer, 85,000 to buy. JP Morgan, your banks are stronger simply because the TLT is weaker, and we know there's an inverse correlation there. This morning, JP Morgan, Citigroup, Bank of America all have buy imbalances as well. Struggling to even find anything with the sell imbalance this morning. IBM is one that stands out. 73,000 shares to sell in IBM, so that could open a bit weaker. But again, even that stock is showing strength as of late. There's just strength across the board here as of late.
All right, just for 17 life here in the Google YouTube chat. He's looking at Tesla trading up $13.90 on 400,000 shares. I just want to alert him that on March 12th and 13th, you had a pair of highs, one at 345.12, the other at 47.21. So some potential resistance there. Also the psychological $350 level. So keep an eye at that 346 area in Tesla. Spencer, what's on the docket for tomorrow?
No guest tomorrow. It's day 2 of our experiment where we go no guest and kind of see how it rolls. So we tried it yesterday. Let us know what you think. If you thought yesterday's show flowed nicely, if you would prefer guests every day, or maybe we have guests on 3 or 4 days a week and do 1 or 2 days a week without a guest. Send us your thoughts. You can email premarket@benzinga.com if you care to do so. So no one on the docket as of now for tomorrow, unless we decide to get a guest on last minute, which is always possible. But if you missed any part of our show today, catch the podcast on iTunes, SoundCloud, and Stitcher, and TuneIn. Just search for PreMarket Prep or Benzinga on any of those sites, and you can also catch our chats. The chats don't die. The premarket.benzinga.com chat does not die when the show ends. So hop in there at any point during the day, and there are people hanging out talking stocks throughout the day. But that's it for us. So everyone have a good rest of your day. We will see you guys tomorrow.